The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the July 7th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it out to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day here with a sea of red out there. All the U.S. indices that we track are trading to the downside. Biggest mover to the downside is the semiconductors off 1 0.6%. 0.6 for the Dow. That's about 275 points. 0.6 for the S&P or 38.7 for the NASDAQ 100. 165. 0.9 for the Russell. That's a 21-point move there. We've got a number. If you take a look at the three right-hand columns of my left-hand market analyzer screen, if you will, the daily is the third column from the left. You'll see a number of stars out there. All of those stars are identifying TD9 count topping patterns out there. We also have one up here for Qualcomm. If we take a look at the top 8 instruments inside of the NDX 100, the only one with the TD9 count pattern is Qualcomm. If we take a look at Qualcomm right now, if this were to end the day, Qualcomm would not have a TD9 count top. In order for bar number 9 to complete, we need to see a close above bar number 5. Bar number 5's close is 159.26. We are trading below that right now. Perhaps by day's end, we get back above it. If we don't, then all we have inside of Qualcomm is a consolidation with inside its daily profile, support at 156.46, resistance 162.09. I say that's all we'll have. The reality is, what we really have out here with regard to Qualcomm, is there anyone looking at my chart, whether you're doing it on the YouTube channel, you're inside the Tiger's Den, I'll give you a hint. Look to the lower left chart, the monthly time frame chart. Is there anything in that monthly chart that suggests that what we just saw here with regard to Qualcomm setting up some type of top, whether it's a TD9 count top or just a top, is there any magic there? No. It's that oscillator and change line. We have seen price find resistance at that oscillator and change line ever since August of 2024. We're coming up on a full year out here. 164.64. Now, the cool thing about that, for those of you that track Qualcomm, is any close above that on a monthly time frame is going to be a very bullish outcome out there. So a number of the TD9 counts, I'll stay away from the cash indices for the moment. In fact, let's actually do this. Let's slide from here, since we're primarily dealing with the indices, the industrials, and the financial sector and the technology sector. So let's take care of those first. Let's take a look at the industrial sector, which is completing a TD9 count topping pattern today. It meant bar number 9 successfully formed on Friday. So its downside price target, initial downside price target, is going to be support. And that first level is going to be that green oscillator and change line at 148.38. Don't worry about the 38. So 148. If price were to close below that, we'd be looking at a move back towards 145.56. And as long as price does not close below 144.14, the move to the downside would just be a counter trend move. No topping pattern on the weekly time frame chart, no topping pattern on the monthly time frame chart. So just the daily time frame chart. That is the industrial sector, the XLI. If we look at the financial sector, it's going to go ahead and form a TD9 count top today. That is as long as price closes above bar number 5. The close of bar number 5 for the XLK is 253.23. We're 255.41. What price should first do is test that oscillator and change line. Not much further than where we're trading right now. That's at 254.79. Below that, support, old resistance, profile resistance, 253.92. And if the XLK were to get inside that, you'll be looking at a move back towards 247 to 249. Now, the weekly time frame chart is muy importante when we take a look at the XLK, the number one sector, weighted sector inside the S&P 500. Why is that important, Steve-O? Because last week, its TD9 count top was negated. So the weekly time frame for the XLK does not have any top whatsoever. If anything, we could probably go back and find a fairly large A to B equals CD pattern to the upside out there. So, but the daily does have that TD9 count top. What that is really signaling to me is we're more likely to see a 2-bar pullback, a 2-day pullback before price resumes higher. Just simply the negated signal on the weekly, no topping pattern on the monthly time frame. Did we cover it? Did I do the financials? I didn't do the financials, I don't think. So let's look at the XLF. The XLF is completing or has a completed TD9 count top. Price is pulling back now. That first level of support is around 52.38, that daily oscillator and change line. The weekly time frame last week negated a Rhodes Momentum Indicator top that had formed, looks like back in last February, last March. Let me open up the chart here so we'll take a look at it. In fact, it was a bearish engulfing candle that this March it is, on March 7, that formed that Rhodes Momentum Indicator top. Price pulls back, finds support at its breakout area at 44.67, and now we've got no topping pattern whatsoever for the XL for its weekly time frame, nor do we have a topping pattern for its monthly time frame at the moment. So we're likely to see a 2-bar pullback, 2 to 3-bar pullback, with price trying to seek out support, and in the XLF, that's 52.38 out there. Let's go switch over and take a look at the daily equity future contracts. So here what we're going to see is we're going to see the Russell 2000 completed on Friday, its TD9 count top. Price should pull back towards 22.18. The Dow equity future contract will complete its TD9 count top today. Price should pull back towards 44.359. Both of those were the green oscillator and change lines. In the case of the NQ, it needs a close above that bar number 5 number. If I didn't give you the number, I'm giving it to you right now at day's end. If the NQ is able to close above 22,893.25, we will have a TD9 count top. Now, at the moment in time, price is trading both below the top of its profile, 22,394, and its green oscillator and change line at 22,905. Because it's green, it doesn't mean that price has to get down to support, which is in the range of 22,250 to 22,524. Although we have to identify that as the price target area, if in fact on a daily basis the NQ closes below that oscillator and change line. And finally, the ES Mini will go ahead and form a TD9 count top today, complete that pattern tomorrow. It forms that top today as long as price closes above. It is pretty good odds, 62.53.75. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's take a quick peek in on the advanced client oscillator for the New York Stock Exchange, which did on Friday close above that plus 150 level. That's your lower left-hand screen out there. When you close above plus 150, number one, we get into overbought condition. So that condition is being worked off. We've worked it off already. We're down below that plus 150. We're at the 63 level out there. So that condition is in place. When you close above the plus 150 level, it tells us about future higher prices to come. So this signal here is telling us by no means do we have any kind of major top that is forming. And that advanced client line, by the way, being at new all-time highs. Not today necessarily, but it was most certainly on Friday. On the New York Stock Exchange, you can see there's a TD9 count pattern that will go ahead and form today as long as price closes above the close of bar number 5, a likely outcome. The close of bar number 5, 24.2955. This is still in control of the buyers out there as long as that advanced client oscillator remains above its 0 threshold level. If we look at the spot VIX index, now we do have a rising spot VIX index, so that could be signaling, and it's really going along with what we're taking a look at on those TD9 count patterns out here, right? We would see volatility rise, but in order for there to be damage, substantial damage done inside the S&P 500, you would need to see a close above 1972. That's the 50-day exponential moving average of the spot VIX index out there. But right now, both those are set up in position for to provide buyers with an edge out there. Again, a likely price target for the New York Stock Exchange at about the 25.21 level, the current green oscillator unchanged line. Is there anything else out here for us to take a look at? You know, there probably is the daily cash indices, and then we'll start getting into the requests that have come in. If you look at the Dow Jones cash indice, you'll see a completed TD9 count top. That should take price back to its oscillator and change line. This cash indice we're looking at here, that number 44,070. S&P 500 looks like it'll close above bar number 5. Its price target to the downside right now is 62.21. The NDX 100, in order to close above bar number 5 it will need a close today above 22,679.01. We're 22,708. Now, price is sitting right on its oscillator and change line. So where would price pull back next? Well, first we start taking a look at a 2-day pullback. Our target right now is just a junior swing point, if you will, from July 1st out there. That's down at the 22,388 area. The Russell 2000 likely targeting 2203. That's after completing a TD9 count top on Friday. The semiconductor index needs a close today above 55.46, 54. We're at 55.62. So watch that 55.46, 54 level. In the case of the transports, they completed a TD9 count top on Friday. Should pull back towards the 15,664 level. That's the green oscillator and change line. The NASDAQ composite, a close today above 2369.73, creates a TD9 count top. And the New York Stock Exchange, we already covered that, also with the TD. So the cash indices, they are really suggesting that we're going to get TD9 count tops. We need to see the close. The NDX 100 is the one that we want to keep our eyes on because if the TD9 count pattern goes away, that's really telling us about a further rally, a strong further rally to come out there. So that's what's going on. We look at the future contracts and the daily cash indices for their daily time frame, as well as a couple sectors inside the S&P 500. Now let's move on to some of the requests that have come in. We have XPEV wants to take a GTE, wants to look at XPEV, favorite stock. Nothing new here. GT. There is nothing new here. There will not be anything new here unless we see a close below 1597 or a close above 2467. I realize that's quite a range out there. We just have a consolidation, whether it's in the daily profile, the weekly profile, the monthly profile. The monthly profile has a sideways consolidation pattern. The weekly time frame had a TD9 count top. Price, no bottom signal out here. So you're just trading with inside of profiles out there. Your message that it crashed, I see XPEV. Now, I don't know what it did in China on Friday, but, on Thursday here, we closed at 1 o'clock in the afternoon at 1885. We're trading at 1806 right now. Not much of a crash out there. You have support between the range on the daily time frame of 1669 and 1780. So that's what we have with regard to XPEV out there. GT, I hope that helps you out. Dan was interested in taking a look at Nike. Dan wanted to look at the intraday charts out here. So let's pull that up. Now, when we take a look at an intraday chart, first I got to find it. Here we go. We take a look at an intraday chart out there. You're going to see that Stevie uses likely different time frames than most people. Now, you'll see a 15 and a 30 minute, and a lot of people will use that from an intraday time period, waiting for these charts here to populate. But most people would not use a 65-minute chart. They would use 60. The problem with using a 60-minute time frame chart is there are not equal number of bars in the day. When we take a look at each of these bars out here, it's important that each one measures, this is a time frame, that each one measures the same time frame. A day, a 15-minute bar, a 30-minute bar. Well, it turns out if you use 65 minutes, you will get equally timed bars throughout the day. 130-minute bars, also, you get 3 of those, and you get 2 195-minute bars out here. So that's what you see on our screen. Now I've got a monthly and a weekly and a daily time frame. It's really that daily time frame that's going to go ahead and form a TD9 count top today. We're far enough away from bar number 5 that unless Nike just falls off planet Earth out there, it's likely to go ahead to confirm a TD9 count top today, complete that pattern tomorrow. Now that's the good, the bad, the ugly, right? What a great movie out there. Was that the good? Was that the bad, or was that the ugly? Well, it's a TD9 count top, all right? And I think, Dan, you're asking, will this get to 72? Here's what's in the way so far. The first thing that's in the way is a new profile that has formed today. So that's helpful that we're looking at it today. If we take a look at where that new profile is at, that is at the price point of 75.79. 74.07 is the center, and 68.93 is support. If, in fact, we could get Nike to get below 74.07, then the answer to your question would be 72 would really be in the cards. I would say 68.93. But right now, price is above a green oscillator and change line, for the daily time frame and the top of a new profile, and those are simply bullish conditions, period, end of story. Doesn't mean that it can't pull back, just that those are bullish conditions. We also happen to have triggered, and we triggered this a few days ago, 4 days, 5 days ago, wave number 7, letter G. Actually, I take that back. We triggered that 3 days ago. Now, that needs a lower high to confirm a pattern. I can see an A to B equals CD pattern. If we got a bearish shooting star, which is what it shows right now, that would also be a top. We don't need multiple tops. We just need one single top. But in order for this to move lower, Dan, you've got to see price start trading below the top of that daily profile out there. Which right now is really new resistance, but we're trading above it, so it's actually support out there. That's the daily time frame. What do we got on the 195-minute time frame? Turns out we've got a TD9 count top that went ahead and formed at 12:45 on Thursday. It is completing, was that Thursday or what? Yeah. And it is Wednesday. And it is completing that pattern today. That's going to be at 12:45 today. Now, you'll have a TD9 count top. That should take price back towards the top of its profile, 74.19. A TD9 count top forming on the 130-minute time frame chart. No topping. Well, you've got, I take that back. You had a 65-minute Rhodes Momentum Indicator top. We come back from this break. We'll finish taking a look at Nike for Dan. Then we'll look at SATL, Marvell, ARM. We'll look at the Euro. We'll look at the Yen. Be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. So let's finish off these charts here for Nike. We've already identified that first level of support. So the first level of support is going to be the top of the new profile, 75.79. If price were to close below that, then Dan will be looking at out here. It could be, I'd take a snapshot of this because of all the intraday, daily intraday topping signals. And this way you're going to have profile levels, for example, inside the 30-minute time frame chart. You'll want to pay attention to 75.08, 75.29 on the 65-minute chart. 75.50 or so on the 130-minute. At first, 74.19 if price were to close below that level out there. And we've got 74.19 on the 195-minute chart. So hope that helps you out with regard to Nike. Do we see it getting down to the 72 level? It's got its work cut out in order to do that. It's not going to be an easy chore in order for that to unfold out there. Let's go take a SATL. This is for Nitram inside the Tiger's Den. Nitram, you're welcome. Perfect. You got a screenshot. If we take a look at SATL, satellite, looks like out here, this is trading right now below the bottom of its daily profile and below its red oscillator and change line. So what that is suggesting is that wants lower price. The lower price that I would be looking at would come from the weekly time frame chart. And the weekly time frame chart has a buy zone. The buy zone has been tested about 5 weeks back, and that held. And that zone is between 291 and 315. If price were to close below 291, then we'd be looking to move back to 275. 275 would be the bottom of the monthly profile. So the daily is suggesting lower price. The weekly is saying that lower price likely finds support between 291 and 315. Nitram, hope that provided you with the info you were looking for on SATL. Duncan Steve wanted to take it Marvell, MRVL. So let's pull that up on our screen out here. We take a look at Marvell. It's trading out at, come on, populate, would you? It's trading out at 72.03. Now, Marvell formed a TD9 count top, looks like about a week and a half ago or so, and now price is testing the top of its daily profile, Steve-O. And the top of that profile is currently printing at 72.31. A close below 72.31, and we're trading at 72.07. It's going to suggest a move back towards 68.04 to 69.11. Both the TD9 count breakout and bottom of its daily profile. The weekly time frame chart just simply doesn't have a topping pattern per se. Just shows us trading below last week's low. This is going to be week number 2 to the downside. That may be it if Marvell is going to remain in a bullish mode. The weekly time frame found resistance up at its oscillator and change line, now backing off a bit out here. So watch the daily and watch support. Again, 68.04, 69.11. This is going to be day number 1 to the downside. The last couple of bottoms were 2-day moves to the downside out there. So perhaps tomorrow you see price down around that buy zone, 68.04, 69.11. Dunk, that's what you'd be watching for. You also want to take a look at ARM Holdings. ARM is the ticker symbol out here. So let's go take a look at it, see what it is trading at. I think I have too many things open on my screen. It's trading at 147.20. That's inside the monthly profile. The weekly time frame had a TD9 count bottom, found resistance up at its breakdown level, 161.15. We're trading below last week's low. Dunk, I would say this is going to go target its green oscillator and change line. The 138 and change level right now, 47 on my screen. The daily time frame has a confirmed TD9 count top, trading below profile support. A close today and tomorrow below 152.88 has a profile change in trend and likely indicates price pulling back towards 137.25. That is the daily TD9 count breakout level. So that's where ARM Holdings appears to be headed to, Dunk. Today is going to be day number 1 to the downside. This tends to do 2 to 3 day bars moves to the downside out there. So, keep that in consideration as well. Mr. Bill wants to look at the euro, and he wanted to look at the euro for all time frames, and that's not a problem. It just means Stevie's got to change screens out here. So first I'm going to get up those euro charts, so I know that I'm changing screens, and I hope that I remember. I do hope that I remember to change it back. So let's go, Mr. Bill. You might need you to keep an eye on me. So we're going to change screens. Take a look at the Euro charts here momentarily. It should pop up. Here we go. Screen number 4. So if we look at the monthly time frame out here on the Euro, you wanted all time frames. Let's open it up. It has an A to B equals CD pattern to the upside. And that A to B equals CD pattern suggests that where we would find resistance is at $1.19. So now it doesn't have to complete there, but you've got TD9 count breakdown resistance at that level. That is coming from the monthly time frame chart. The weekly time frame chart is rather bullish from the standpoint that it negated a TD9 count topping pattern 2 weeks ago. I don't see any other kind of top at this moment in time. But I take that back. Really, the A to B equals CD pattern that we have to draw in here, let me do that, is really the one that we were looking at on the monthly time frame. But this is the valid A to B. Just making sure that's the high of the pattern. It is. And pull this over. I'm going to pull this over to that C point. Pulling the whole chart. Stevie is screwing up the whole thing. Sorry about that. Let's try this one more time. So here's your A to B equals CD pattern. You're still not close enough. Even if you got that bearish reversal candle today, that says you still had higher inside of the Euro. So no top there on the weekly time frame. The daily does not have a top. However, it has lost its momentum, and it's lost momentum by closing below or trading below right now. It's green oscillator and change on it, $1.17. The 30-minute time frame chart, unless there was an A to B equals CD pattern to the downside, and there was. Yeah, there most certainly was. So now what the Euro is struggling with on a 30-minute time frame, and what you'd be watching for, Mr. Bill, if the Euro is going to rally, price would close above 1.17478 if we want to get granular here. That is the area where on a 30-minute time frame, price would find resistance if this was only a counter trend rally. I do not know that. TD9 count bottom on the 60-minute time frame, price finding resistance at its oscillator and change line. There's $1.17 there, 1.1737. If price could close above that, we ought to see 1.1763. Mr. Bill, that's all I've really got for you on the Euro. So I hope that gave you the information that you were looking for there. I am going to close this chart by doing so. No, I'm not going to do that right now. I'll do that when it comes. There's got a break in a minute. I'm going to go to the yen charts out here. Let's pull up the yen charts. This is probably what is helping to, because I've got all these time frames, so it's a lot of data that is churning throughout here. But we'll pull up the charts here for the yen. You can see on the weekly time frame, the yen's got an A to B equals CD pattern to the downside. That still could come to fruition, but price has got to get back below that red oscillator and change line. The daily time frame has been nothing more than kind of a sideways-ish type move. If we open it up out there, you'll see just a sideways move, but we are trading above its oscillator and change line. You would say if it can close inside today, 145.99 or 145.86, we likely get up to test the top of that shooting star candle at the 148.03 area out here. Japanese yen, no topping signals yet on a 60, on a 120, on a 240, on a 5-hour. The 30-minute time frame chart will go ahead and confirm a TD9 count top at 12 noon, complete that pattern at 12:30. But even that still looks pretty strong to Stevie out here, which really says as the yen is moving higher, it's actually getting weaker. The dollar's getting stronger. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the seasonal stock chart out here for the S&P 500. I'm sorry, trying to multitask and screwing up. And the question is that Jambalaya inside the Tiger's Den is under the impression, or has read some things that suggest that that after we come back from the July 4th holiday, that the S&P or the markets will typically trade lower. So Jambalaya, this is a 97-year chart for the S&P 500. I've chosen the month of July, so this is all July that we're looking at, July 1st through the 31st, and how over that 97-year period price has traded. And what we see here is if we go to July, I got to change the screens. Thank you. Share stream, change stream. Thank you, Al. Thank you for catching me. Entire screen. Get back here. Now we should see it. Okay, excellent, excellent. I knew I'd screw it up. I didn't really know it. I was trying not to, but I did. Odds favored. If we were in Vegas, we were going to bet that Stevie was going to screw that up. Okay, so now here we go. We got 97 years worth of data. You can see it up here in the upper right-hand corner. We've chosen the month of July. This is how July is traded on average over a 97-year period of time. That doesn't match up with what you're looking at. Doesn't mean that we can't trade lower. We do have these tops out there, but seasonally speaking, July doesn't really form any kind of significant top, really, almost ever over a 97-year period of time out there. But if it does come in, it's usually the middle of the month for just a few days. Now, that's 97 years. You might say, hey, Stevie, that's just too much time. All right, here is a 25-year period of time. So over 25 years, we're still looking at the July, and you can see that on the 4th, or, you typically move up for a day, down for a day, up for a few days, a little bit choppy, I suppose. Maybe choppy might have been the word that you were using out there. If we don't like 25 years worth of data and we still think that's too much, we can put it on 15 years worth of data. If we put on 15 years worth of data, that's suggesting that we just continue to motor on higher out there. So the charts are not necessarily suggesting that the market's going to move lower after the 4th of July. Our good friend, may he rest in peace, our favorite polar bear, would tell us that you typically see a change in direction after holiday. Most certainly he shared that concept with us. I don't have the charts to prove that to you. All I can do is come back and take a look at the seasonal data, put that up there, and then allow you to make the decision that you want out there. So that's what I see, Jim. I hope that helped you out. If you're looking for something else, please let me know, and I'll try to grab that data. We're going to go take a look at RXRX. Is from Mohammed. Mohammed, RXRX is trading back inside its daily profile. In order to do that, it just needs a trade below 509. It has buy zone between 431 and 450. Sideways consolidation, what I see from the daily time frame, weekly time frame, monthly time frame. Weekly time frame price is back inside its profile. As long as it remains below 504, that will be its case. If it closes below 475, we likely see 418. On a monthly time frame, we don't have any kind. I take that back. We formed last month. We formed a Rhodes momentum indicator bottom. Now the key level here is going to be 605, and 605 is a bottom on the monthly profile. However, before price is even gonna consider getting up there, you've got to get back above that formula 509, not 409, but 509 out there. Again, the top of that daily profile. If this thing can start trading above 509, then you start heading higher up towards 605. Until then, price is likely to pull back with a price target maybe being 475 or 431 to 450. Mohammed, you also want to look at ticker symbol COHR. Let's pull those charts up on our screen, see what that is doing. It is trading out at 88.47. It could form a Rhodes momentum indicator top for its daily time frame today. It's got the bear separating candle. If price closes below its oscillator and change line, we're printing just slightly below it, it being 88.48 out there, then we're likely to see a pullback towards 83.20. No topping signal on the weekly time frame. Price is consolidated with inside its profile. Resistance at 97.97. Consolidation on the monthly time frame chart as well out there. So we got a lot of profiles going on the monthly and the weekly, not so much on the daily time frame. But the daily time frame top of its profile becomes a target if price closes below its oscillator and change line. So Mohammed, I hope that helps you out with regard to COHR. B. Lee wants to take a look at USAS out here. So let's pull that chart up on our screen. USAS is trading out at 93 cents. It is trading above the top of its daily profile, which was 88 pennies. No topping pattern on the daily time frame. It has triggered a Rhodes momentum indicator signal, but that's not important unless we see a bearish reversal candle form. Anytime that pattern is present. The weekly time frame chart is triggered bar number 8 of a TD9 count. In order to trigger bar number 9 next week price is going to have to close above 82 cents out there. So keep that in mind. There's the possibility of a TD9 count, but we won't really know until we get towards next Friday out there. Monthly time frame, USAS has got a beautiful TD9 count bottom, profile change in trend, price closed above its TD9 count breakdown resistance. Monthly time frame, you're in the right play box out here, Lee, because price is just says this wants to move higher, but it's got to deal with the weekly time frame. Could be next week. Could be the week after. Watch the daily time frame. That's what really probably gives you your cue that the weekly's getting ready to pull back to test that oscillator and change line. Currently printing in around the 80-cent level out there. Nicholas writes in, Nicholas would like to look at the NQ's intraday charts out here. So let's see if Stevie has those up. Not sure which charts we've got here. It is the intraday charts for the NQ. Where do we want to begin, Nicholas? Well, first, let's get Stevie to populate these things, so I know what we're dealing with here. Okie dokie. All right, so on a 15-minute time frame, you have a TD9 count bottom that formed at 11 a.m. sharp. Price ran into resistance at 22.924. That's its oscillator and change line. If price can close above that, you would see a rally up towards 22.949. Above that, 22.991. That is the only intraday bottoming signal pattern, I should say. If you look at the If the TD9 count bottom fails, let's take a look at that. That requires a close below 22,882.50. Then we are likely to see a move that takes us back to 22,850.75. The 30-minute TD9 count breakdown resistance level. We are going up against a TD9 count bottom on a 30-minute basis. That formed at 7 o'clock in the morning on July the 4th out there. That being 22,882. So you got to see a close below 22,882 to really suggest that we're headed much lower out there. 240-minute is finding support at the top of its profile. The same thing with the 5-hour chart out there. That's basically in the 22,901 area. That's what I've got for you, Nicholas. I'm not seeing anything that's overly bearish out there. Just kind of normal. For the most part. So those are the intraday charts. Hope that helps you out. Rahul wanted to take a look at the DAX out here. So let's pull up the charts here for the DAX. The DAX trading out at, that is not the DAX. Let's try to actually get the DAX. That should be right here. We'll go ahead and take a look at the DAX when we come back from this break. What it has is a monthly TD9 count top. What it has is a weekly Rhodes Momentum Indicator top. And what it has on the daily time frame, it's got a Rhodes Momentum Indicator top as well. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at the DAX on Thursday's show. I was showing you the DAX in other currencies and how the DAX was at a new all-time high in terms of dollars, but not in terms of Great British Pound, and more importantly, in terms of euros. And I think that's a setup for a longer-term short trade inside the DAX. Got that TD9 count topping signal. Of course, that pattern, that thought process would be negated with a close above the DAX 24,479.42. I like the fact that it formed that weekly Rhodes Momentum Indicator top. Now price is rallying towards its green oscillator and change line around 24,143. It may even get up to 24,168.59. Well, that's its TD9 count breakdown resistance level. If I'm right about this and it's a good short trade, that's probably where price rallies into and runs into resistance and then turns back down and starts trading lower. John, Mr. Z inside the Tiger's Den, had a question about the Dow Jones Industrial Average. Is this an important top that is forming here? He was picking up on my TD9 count pattern, and in his instance, he was also looking at a three gap play out there. I don't have the time to go take a look at a three gap play. What I will do, though, John, is I'm going to do a segment with Tommy today. So I will answer that question in more detail. Is it an important top that we're looking at inside the Dow? So please tune in at 9:15 for that. Here on the daily time frame, you can see the daily TD9 count topping pattern. Price should pull back and just simply pull back to test the oscillator and change around 44,063, or all we get is like a 2-day retracement out there. In a very strong bull market, you typically get 2-bar knee-jerk reaction lows out there. In the case of a weekly time frame, the Dow Jones closed above its TD9 count breakdown resistance level at 44,636.19 last week. That is a positive. The monthly still has a Rhodes Momentum Indicator top out there. That had formed about a year ago. It actually formed in the month of December 2024 out there. So not a full year. But I will fully look at and answer that question for you, John, about the Dow Jones Industrials. Folks, stay tuned for all the great programming. Again, I'll be back with you at 3:15 with Tommy. Short of that, have a magical Monday. Thanks for joining us. We'll look forward to speaking with you again soon. Take care now.